This is not a drill. In the last few months, something extraordinary has been happening quietly inside the global metals market, and almost no one outside the industry is paying attention. Silver, the metal that built the first coins, powered the Industrial Revolution, and today runs the green energy transition, is disappearing from visible inventories. And the country sitting at the center of this shift is China. Not the United States, not Europe, but Beijing. While most analysts have been focused on gold, oil, and the dollar, China has been quietly tightening its grip on something far more strategic. The industrial precious metal that makes solar panels work, that connects electric vehicles to the grid, and that serves as the bridge between old money and new energy, silver. This is not just a story about commodities. This is about how China, facing slowing growth, high youth unemployment, and a declining property sector, is reshaping its power play through materials that define the next era of civilization. And silver sits right at the heart of it. Let's start with what's happening on the ground. In the last 2 years, global silver inventories on the COMEX and LBMA exchanges have fallen by more than 70%. Warehouses that used to hold hundreds of millions of ounces are now running on fumes. Analysts at Metals Focus and CPM Group estimate that 2024 and 2025 will record the largest silver supply deficit in modern history, roughly 250 million ounces short each year. That means global demand is outpacing mine production by 250 million ounces annually. But where is all that silver going? The answer: China. According to customs data and satellite-tracked shipments, Chinese imports of silver surged to record highs over the past year. Refiners in Hong Kong and Shanghai have been aggressively buying both raw silver and finished bullion from Western markets, often paying premiums over global spot prices. At the same time, Chinese state-owned enterprises have been expanding refining capacity and building strategic stockpiles behind closed doors. Why? Because silver is not just a shiny metal. It's the bloodstream of the clean tech revolution. Each electric vehicle uses up to 2 ounces of silver in wiring, sensors, and battery management systems. Every solar panel uses a thin layer of silver paste to conduct electricity from sunlight into usable power. Multiply that by hundreds of millions of vehicles and trillions of watts of solar panels, and you get the picture. China knows this. The country already controls more than 80% of global solar panel production and a dominant share of battery manufacturing. But what happens when the key ingredient that makes all those systems run starts running short? Whoever controls that supply controls the future of energy itself. That's why Beijing's move is so strategic. On paper, China appears to be stockpiling for industrial use. In reality, it is creating a dual weapon, a manufacturing edge and a potential monetary hedge. Because silver, like gold, is money in disguise. It's one of the oldest forms of wealth preservation known to humanity. The world's first global currency was not digital. It was silver. From the Spanish Empire to the Qing dynasty, silver coins powered trade long before paper promises existed. Now imagine this: a world where China holds not only the world's largest share of solar panels, electric vehicles, and batteries, but also the world's deepest reserves of the metal that makes them possible. That's not just industrial dominance, that's strategic leverage. While the US debates interest rates and deficit spending, China is thinking in centuries. It's not trading silver for profit, it's hoarding it for power. Let's connect the dots. In 2023, when global markets were focused on gold's slow march past $2,100, Chinese import data showed something astonishing. Silver inflows hit their highest level since records began. Domestic silver premiums in Shanghai rose above international prices, signaling real physical tightness. And while Western investors were selling paper silver ETFs, Chinese buyers were taking delivery of real metal, the kind you can hold, not the kind you trade on a screen. This is the same pattern we've seen before, in oil, in lithium, and in rare earths. First, China becomes the largest buyer. Then it becomes the largest refiner. Then it restricts exports, forcing the rest of the world to pay higher prices or depend on Beijing's goodwill. It's resource nationalism, 21st century edition, wrapped in clean energy branding. Now here's where it gets even more interesting. Silver is not just an industrial story, it's also a monetary story. Since 2020, as central banks printed trillions of dollars and interest rates whipsawed, investors began rediscovering silver's role as a chaos hedge. When inflation surged, gold moved first, but silver, the smaller, faster metal, followed like a coiled spring. Historically, silver outperforms gold in the late stages of monetary stress. Why? Because it's both an industrial necessity and a store of value. It reacts to fear and to growth. Now think about that in the context of China's actions. If Beijing is accumulating silver while the West treats it as just another commodity, it is effectively building an asset base that works both ways, a pillar of its green economy and a hedge against the weakening US dollar system. Some analysts call this the silver trap, because as China buys more and Western inventories drain, the price mechanism breaks. The paper silver market, the futures and ETFs, can't keep up with physical demand. And when that happens, spot prices can disconnect violently. That's when silver stops behaving like a commodity and starts behaving like money again. Let's go deeper into the monetary math. Global silver production is roughly 820 million ounces per year. Total demand, according to the Silver Institute, is now around 1.1 billion ounces. That's a deficit of nearly 300 million ounces. And that gap is widening. Most silver is produced as a byproduct of mining for other metals like zinc, lead, and copper. That means miners can't easily increase supply even if prices spike. You can't just open a new silver mine overnight. Meanwhile, industrial demand is growing relentlessly. The International Energy Agency expects solar capacity to double again by 2030. Electric vehicle sales are expected to triple. Data centers, electronics, and medical technologies are all consuming more silver than ever before. So we have a paradox: record industrial demand, shrinking inventories, limited new supply, and one country buying aggressively into the shortage. This is what makes silver so different from gold. Gold is mostly held in vaults. Silver is consumed, literally used up. Once it's in a solar panel or an iPhone, it's gone for good. Recycling helps, but not enough to fill the gap. And that's where China's strategy becomes genius, or ruthless, depending on your perspective. By controlling the industries that consume silver, China effectively controls global silver flow. It can decide whether that silver stays in domestic supply chains or gets exported as finished products. In other words, the world may soon have to buy not silver, but Chinese manufactured goods that contain it. That's leverage you can't print. Western governments are waking up to this, but slowly. The U.S. Inflation Reduction Act was supposed to encourage domestic clean energy production, but without control over raw materials, it's like building a car factory with no steel. Europe, meanwhile, has been warning about strategic dependencies, but most of its green tech imports still come from, you guessed it, China. Meanwhile, China is not stopping. Recent data shows it has been quietly restricting exports of certain metal products, including gallium and germanium, both critical for semiconductors and solar. It wouldn't take much for Beijing to add silver-related materials to that list. One decree, one policy shift, and the global clean energy supply chain could be disrupted overnight. Now let's talk about the price. At around $25 to $30 per ounce, silver remains historically cheap compared to gold. The gold-to-silver ratio, the number of silver ounces it takes to buy 1 ounce of gold, still hovers near 80. Historically, during major monetary shifts, that ratio compresses toward 40 or even 30. If gold reaches $3,000, silver at a 40.1 ratio implies $75. If gold hits $5,000, silver could move above $125 per ounce. Is that a prediction? No. It's math based on history. The last time silver approached triple digits was 1980, when inflation and monetary tension peaked. Back then, it was the Hunt brothers trying to corner the market. This time, it's a nation-state, China, and the motive isn't speculation, it's strategy. Now, let's bring this back to you, the viewer, the investor, the citizen, trying to make sense of a changing world. What does China's silver trap mean for your money, your economy, your future? First, it means the global monetary order is diversifying faster than anyone admits. The dollar is still the king, but its throne is creaking. As more countries seek alternatives, from BRICS trade settlements to local currency swaps, hard assets are regaining silent power. Gold and silver are no longer relics. They are reasserting themselves as anchors in a floating system of promises. Second, it means inflation isn't dead. Even if central banks claim victory, the structural forces that drive prices higher, resource scarcity, geopolitical competition, and energy transition, are just beginning. Silver sits at the intersection of all three. Third, it means the next phase of global competition won't be fought with tanks or tariffs alone. It will be fought with commodities, with control over the materials that define progress. Whoever controls silver, lithium, copper, and rare earths will control the rhythm of industrial civilization. And fourth, it means the smartest money in the world is already moving. Central banks bought more gold in the last 2 years than at any time in modern history. What do you think they'll do next when silver starts running short? The writing is on the wall. We are entering a new kind of monetary era, one where tangible value beats paper promises. A world where trust is measured in ounces, not interest rates. For now, the headlines will still talk about inflation numbers, rate cuts, and GDP. But beneath that noise, a deeper shift is underway, a silent repositioning of power through metals. China's silver accumulation is not a random trade. It's part of a long game, one that connects energy, money, and influence into a single chain. The world's clean energy future depends on silver. And right now, one country holds the key to that chain. So as investors laugh at the price volatility and traders call it just another metal, remember? This is exactly how big shifts begin. Quietly, slowly, and then suddenly. Because in the end, silver is more than a metal. It's a message. A message that the next monetary reset won't just be about gold or digital currencies. It will be about the tangible materials that make civilization run. And when those materials start running short, the old financial order runs out of time. This is the global domino. Stay alert. Stay informed. Vigilance, not complacency.